Hello, this is John Piper with the weekend video clip, and it's Saturday the 10th of August, and we're looking here at a weekly chart of the Dow. I can't show the whole of this chart. I wanted to show the 5-wave pattern from this low here. We have this 1, 2, 3, 4 and 5. You can see clearly the trend line here, which is documented twice, not a huge number of times, but it is that one, and this one is documented 3 times. So we have major support and resistance. I'll just change this chart now and bring it into to the form of the thing. So this is the final rally. So this is the 5th part of this, and we can see that we are now nearing an ABC form, which is the normal form of triangles, the final level. So the question I want to address today, and this report is expanded, it is the first part of this month's Technical Trader, as well as the weekend video clip. Now there's a clear target around 16,000, 16,500, depending on how you draw it. The question is, might we have peaked already? So that's going to be the topic for this part of the Technical Trader. So let's have a look at the shorter term action on the Dow. This is the daily chart. This was the B wave I showed you a minute ago. And we've got an A, B and C, and if we look at the C, we can see that it itself is a 1, 2, 3, 4 and a 5. Okay, there are various different possibilities here, but if we now look at this final move here, I say the final move in the sense that it's the last one we've seen, not that it's necessarily the final move of the move, although it may be. But let's have a look at the down. Okay, here's this 5th wave just looked at, and again we've got a clear 1, 2, 3, 4, very dithery 5, which is what you'd expect really. If you're getting to a major peak, then the negative forces can start to have an effect, and now we're seeing this decline, which we'll look at in a minute. Everything stacks up quite well with that count. However, one of the primary issues with Elliott wave theory is that you can often count a 4th wave when actually what we're really seeing is a part of the 3rd wave. So what I'm saying is that wave there, rather than being a 4th wave in its own right, could perhaps be some part of 1, 2, 3, 4, 5 of wave 3, and that could then be a 4, and then the 5th wave up to 16,000. So that's probably the main alternative count right now, and it depends on how this wave formation pans out. I have to say that this alternative count doesn't sit very well. There's no obvious 2 wave in here, so right now I prefer the count that we have seen a peak. One important factor is expiry next week. Expiries haven't been too dramatic of late. It doesn't mean to say that expiry is no longer important. It's always going to be important, and it may well be that once expiry out of the way, that something more dramatic will happen. But in fact, the wave pattern on the Dow, which we'll now look at, it's quite encouraging. We're seeing a peak. Now this is the actual peak here. So one count is 1. This is my first count. 1, 2, 3, 4, 5. Then we saw the ABC, which was a bit well, not classic, but when we saw a clear selling spike, there, and we broke below here just by a few points. I had an extreme stop below there. It wasn't actually triggered. I used a few points leeway. I don't know. Nobody's actually told me they were triggered into this position. I don't know. I did warn you not. It may be a 5th wave, but in fact it could be this was the end of 1. I've now seen a 1, 2, and some part of 3. That's one possibility here. In which case we need to fall back pretty rapidly. But it is expiry week, so there is that concern that maybe we're going to dither around a bit. Another account here, and there are quite a few different counts here in fact, but it's possible this is a 1, 2, and then a 1, 2, 3, 4, 5, and then maybe an irregular 4. It's quite a big 4 wave compared to the 2 wave, but not hugely so perhaps. This could then be a 5th wave here, allowing for a B, C, maybe C wave rally as expiry takes place, and then we start to fall back again. So the expiry might be pretty calm, but set the scene for something more dramatic thereafter. So slightly complicated, but there is certainly a case that we have peaked on the Dow, and we just need to see how this develops. Let's have a look at FTSE now. Again, I can't get the full chart on the screen, but this was the all-time peak, 66950 back in December 1999, the last session of the year, New Year's Eve and all that, massive positive psychology at the time, as I've said many times. We have this potentially huge triangle going back that far, and we then saw a false break above it, and we're now back below this number, but we are retesting. In fact, we'll have a look at this in a bit more detail in a minute. So we had this huge decline, then this huge rally, then things really got, the economy, that's when property started to fall away, very sharp decline, then QE came in and we all bounced back again. The economy may be recovering slightly, I mean it remains to be seen really. I guess all this money should have some effect, but QE may now have to be, I mean there seems to be quite strong forces building up that QE's got to stop. It can't go on forever, I don't think. So I think there's a case that we have got a peak in hand now. So let's have a look at this final section here. This is the hourly chart, 1, 2, so a very clear 5-wave decline on the FTSE. Difficult to interpret that any other way. A, B. Now you can get this as a 5-wave, obviously. What's that, my drawing tool? Which suggests this could just be a correction, which is one possibility. Alternatively, rather as with the Dow, it's possible that this blip here is just part of the C wave, so it could be an A, B, and then a C to there, but not ideal. So let's have a look at the actual decline now. And this decline also is not ideal. I mean, there's 1, 2 there definitely, but the 3 is not easy to find. I mean, there could be 1, 2, and then maybe this is some kind of strange, rather truncated third wave, and then maybe that's the 5th wave of 3, then a pretty sharp 4, sharper than you expect really. So I wouldn't say that's a terribly clear reversal pattern at this point. The Dow is better, but again we've got expiry next week, so maybe not much will happen, but we might see the waveform develop more carefully, or more clearly I should say. Right, the DAX has made new highs, or new all-time highs. I mean, these are mini euros in the same way everything's been debased really, but the rally so far is an ABC, some kind of regular peak, maybe unorthodox top. I mean, obviously that would all change if we just shot up further from here. Markets can do what they want, you know, it's certainly not impossible. We can see that. It seems highly unlikely, but you just never know for sure. Let's have a look at the wave pattern at the peak. This is the hourly chart, so we've got a decline there, quite impulsive, no clear form though. Then got a similar pattern to FTSE, although in fact there's an AB there, then a 5. 1, 2, 3. So that could be an ABC. More interestingly, this bit here is actually a clear 5-wave decline. Have a look at that now. Okay, this is short-term action of the last few days, but there's a clear 1, 2, 3, 4, 5. We've then got an A, B, C, then a B, another A, B, C. But again, we've got expiry. I mean, you expect at this point you expect to see a sharp pullback from here. In fact, if we don't see that and we go above here, it will negate the pattern because the time frame of the decline here would be disproportionate to the length of this rally so far. So as far as the DAX is concerned, we really need to see a decline pretty rapidly come Monday morning, which is probably fairly unlikely given the expiry situation, but you know, we'll see how it develops and obviously act accordingly, which is the whole point of trading. Right, quick look at the Nikkei. This is a very long-term chart. The Nikkei peaked in actually this chart is 89, so this chart suggests it's actually 1990, but so that's not correct. Anyway, it's a bit strange. The Yahoo chart, I don't think it makes a huge amount of difference. But you can see the very clear A, B, and then a C wave down to here. Now we're getting this triangular, this slightly downward sloping triangle. In fact, the subscriber's idea was slightly different. I think I've misinterpreted the chart, but this chart is interesting because we have got this very clear and well documented trend line on the Nikkei, which you know, same things. We can see clearly why we were sold off at this point, with support obviously here. Now, having seen this very clear ABC off the top, and this was a very big decline. I mean, we're up near 40,000 back in 1989, and we went down I think to 7,000. So that was a 80% fall, or thereabouts. Yes, almost for a bit, slightly more than 80%, 81%, 82% fall. So 80% is what you expect from a serious bear market. So it's done that, but we haven't managed to get outside this triangle. So there could be another leg down due. It's not impossible, and we've really got to break through the highs here to confirm that we are in fact in a bull market. So let's have a look at the shorter term action. That's the daily charts. We had this breakout from these lows. We went long, I think, in January, so around here somewhere. Caught the move very well, really. We've now almost hit the 16,000 level, which is where that resistance level is, and we'll now look at this in a bit more detail. Right now, fairly ambiguous. A, B, C is one count, and because the A wave is the first fall is so sharp, that's a valid count. Alternatively, there is this possible fifth wave at the end. This thing here could be a fifth wave, so it could be big one wave, then two, then a quite big three wave, and then the four, then this little blip for five. Then we got an A, B, C, and this current move is probably too big for a 4, but it's an ABC currently, so it's all a little bit unclear really right now. It's certainly hedging its bets, and again we need to see some solid conviction. We've now got our stop below here. In fact, the recommended investment's doing quite well, hasn't been affected too much by the pullback, and we'll have to wait and see how it develops, but clearly there's very strong resistance here. If we break outside the lower end of the triangle, which of course is 7,000, a long way away, then another leg down is certainly possible, and the Nikkei, the wave pattern does allow for that, and even suggests it to an extent, because we haven't seen the sort of final sell-off. We've just got an ABC, then a sideways drift, but that doesn't mean that's what's got to happen. But right now we need some clarification on what's going on here. Right, I'll have a look at T-bonds. Okay, T-bonds are trying to rally. We saw a new low there. It could be a fifth wave, but the blip up is fairly feeble. But basically we just come down quite considerably on the T-bond. Interest rates are going up, bonds are coming down, and that seems to be an established trend. We could easily see a bit of a bounce back now, but I think the trend is pretty clear there. Right, gold. Okay, gold has seen this rally, now this correction. The rally's hardly clearly impulsive. It's possibly a 5, but it's very borderline 5. The decline's been quite sharp, but looks corrective so far. We've seen a decent bounce back, so we could still be set for a decent rally here. We got stopped out of our long position for a small profit. I'm slightly undecided right now, but I think there is a case to go long again, but I'll leave it just for now. Finally, pound dollar. Right, here's the daily chart. You can see the great big collapse we've seen. Then we got an ABC up to there. Another leg down, just blipped below the low. And now another rally's coming. It's proving quite strong. It's looking, it wants to retest this 157 level. Have to see how it goes. Really, I hadn't expected to see this secondary rally come in. Our stop is around here. I'd have to see. I think it still looks like a negative chart. We've clearly got impulsive move there, impulsive move there. And these are currently ABCs, so the case remains valid. I'll just have to see how that develops. Okay, that's all for today. I found it interesting and useful. Quite a long report. Have a great weekend. Thanks for listening, and bye for now.